It's going to be stupid for any sort of investor, financial professional not to have an allocation to it. And the math is starting to support us on that. You're more at risk not owning it than you are owning it. Bitcoin needs to be a $20 to $50 trillion asset. The amount of adoption that we witnessed over the past year completely blew my expectations. We're at a major inflection point these days. Bitcoin solves all the problems I care about in the world, and it's very infant, and there's so many massive implications that are going to come from the growth of this asset over time. And this thing's going to change the world. Bitcoin was able throughout history to take all these benefits that we got when we centralized infrastructure around money and improve upon that and still do it in a decentralized architecture. Eventually, we're going to hit this medium exchange explosion. It's very simple to own massive amounts of wealth in it, and it's permissionless. You don't have to move it over the Swift network. You don't have to physically deliver it like gold bars and have those verified. It's actually just like kind of like an ideal, optimal way of storing wealth. Who'd have thought? We're a $2 trillion asset. We're playing with the big boys, but we aren't near the top of the pecking order. And once we get towards the top of the pecking order, that's when Bitcoin takes over sovereign wealth assets. Over the long term, there's a very strong case to be made that we'll end up in a Bitcoin denominated global neutral system that emerged from private markets.
Hi, Eric. How are you doing? Everything fine on your end?
Good, man. I'm busy. It's a crazy time and all good problems to have, but there is a ton happening in Bitcoin, and I think we're at a major inflection point these days.
Interesting. You also talked before we started recording about like the impact for businesses and what you're doing with VC stuff. I want to get into the full stuff of like what the impact for businesses for Bitcoin also will be long term and the banking sector and all that stuff. But maybe for the people that don't know you, like what's your background? What are you currently doing in Bitcoin and what is kind of your role in there?
Yeah. So, I mean, I can give you kind of the full story of how I got involved. Yeah.
Yes, please.
I love economics. Like economics was just something that I guess I love philosophy, and economics is kind of like the most quantifiable form of philosophy to me. And that was something that was just always a hobby of mine in college. I studied finance and econ. I wanted to work in finance, and I wanted to work in like the private equity world. I think I always just kind of read about economics on the side. And while I was majoring in it, I got my standard Keynesian education through undergrad. And I was lucky enough to have been introduced to other areas of thought that I was reading about over Christmas break and in audiobooks when I was driving and things like that. And that always just gave me a very different view of how I thought the world should be versus what it is today. But nonetheless, in terms of being pragmatic and trying to choose a career, it's basically just like, I was very nihilistic when I was younger about the future fate of the financial economy at a global level. We go through these cycles in history. There's been a ton of control over the monetary system. That doesn't really change. There is no solution to change it. Gold's not really going to change that. And that's just the way it is. So you kind of position your career into something that ultimately benefits from it. And that's pretty much where I was. So I worked for a private equity fund. We specialized in acquiring companies that would buy out like distressed or declining assets. So a company's struggling, we would buy them out and try to like turn it around. Something that I always expected would just be a necessity of this type of a boom and bust cycle economy over time. It's a very profitable investment strategy. I didn't understand Bitcoin. I was never like a big technologist. I was much more in depth on the finance and economics side. And, the first time I heard about it, it was just posed as a technology. It was just like, this is this cool blockchain technology that's emerged. And I was like, okay, look, that's interesting. Maybe there's something cool that can come from this. I don't totally get it, but it's not something that I would invest in. This token associated with it, like I don't get it. There's no cash flow, standard financial framework of thinking. So I don't invest in things that I can't really measure their value. And that's where I was at for a number of years. I didn't hate it. I didn't think it was stupid. I just was like, I don't really get this, and it's not the type of investing I do. And then it wasn't until I had a close friend who kept pushing it on me, and the price was doing well at the time and all of that, and I was just kind of like, all right, like I'll look into this a little bit more. And it was some sort of like Reddit post that was like making an argument that it's an alternative to central banking. And I think this was kind of around the time that the Bitcoin standard, or I guess it was a little bit before the Bitcoin standard actually came out. But like that narrative, I was like, oh, that's an incredibly interesting concept, because like at that point in time, I was trying to think of ways of like, what is the escape valve? How can some of this end? We were looking at like Japanese equity markets. Their central bank at that time, back in like owned like 25% of the equity market. And I was like, this is absurd. This isn't how markets are supposed to work. There has to be some sort of mechanism of failure here. And like looking into that, I was just like, I don't know what it is, and I don't know when it's coming. I don't know how we kind of invest around that outcome. It's a lot easier to invest around the outcome of this game's just going to continue, and you can make a lot more money until the music stops. And then once I got deeper into Bitcoin, that's when it clicked with me like, oh, this could be a potential escape valve. And then the questions all flow in of, oh, how, the government's going to stop this thing though. And then I spent some time thinking through that. And then I started to get my head around like, oh, this is actually a very challenging thing for the government to stop. And back then the case wasn't quite as clear in my head that, the cost of like a 51% attack or something like that was high enough for it to potentially just like outright end it. It took me a while to get my head around why that isn't necessarily the primary argument. But once I got comfortable with kind of the risks around it, I got a lot more interested. And then I was kind of like, oh, what about all these other cryptocurrencies? Oh, Ethereum does what Bitcoin does, but it does more stuff. And I, spent like a year reading into different, consensus mechanisms, proof of stake, delegated proof of stake. And I was like, all really interesting. And you kind of get nerd sniped by some of that stuff. And it took me, a year, 2 years to come back to like, oh, this stuff is actually crap once you get deep enough into it. And there's legitimate technologies, I think, that have emerged from it. But the vast majority of the value is all going to flow from there being a monetary asset that's immutable. And it took me a while to come back to that. And once I got that, and then I could understand through all the people that were saying otherwise that Bitcoin is the only asset that maintains those properties, that's when I got a lot more interested and focused on Bitcoin. And then at that point in time, Bitcoin had grown enough to where I was like, okay, this thing's not stopping. I don't really see any sort of reasonable risk case. And of the risks scenarios for Bitcoin I do see at this point, that's the best risk I think you can be taking in the world right now. And that's when I'm just like, what am I doing working in this industry? Like, Bitcoin solves all the problems I care about in the world. And it's very infant. And there's so many massive, massive implications that are going to come from the growth of this asset over time. And this thing's going to change the world. So let's get involved in it. And at that point in time, I quit my job. And I just wanted to get as deep as I possibly could. So I spent like 9 months researching into everything that I was interested in. I got a lot deeper into Bitcoin. I taught myself how to code Python so that I could do Jimmy Song's programming Bitcoin book. And then after I got to that level, I'd read a bunch of other books, not like standard Bitcoin books, but there was a book written by some Princeton professors that was more of like a textbook around the history of Bitcoin, broader cryptocurrency, and cryptography. And like that was super helpful for my understanding. And Mastering Bitcoin was a great book. And then Jimmy Song's book, and a few others. And then a bunch of other different aspects of like banking history I wanted to look into. And through that process, I was like, okay, I should probably be writing some of this stuff out so that I can understand it for myself better. And I ended up writing so much that I was just like, okay, I guess I could turn this thing into a book at this point. And then I just kind of decided like, yeah, let's write a book. So I turned it into a book, and then that book ended up doing a lot better than I ever would have expected. I self-published it, and then the Bitcoin community really liked it. They started promoting it on Twitter pretty heavily. That led to podcast appearances, etc. And yeah, so it kind of filled this void when I was writing the book, where Bitcoin Standard is more economics focused. I wanted to be a lot more holistic and write a book that's going to get like a hedge fund manager to understand Bitcoin at more of a technical level. And that was kind of where my book fit into the niches. I was a bit more pragmatic. I wasn't as ideological. I tried to like source information from like the Federal Reserve directly where I could, things kind of like that, so that I wasn't just like, here's what Austrian economists think and that's what I think. And I wanted to be a lot more technical in my explanation of Bitcoin, not in everything. Like you go read a developer book on Bitcoin, and they're going to teach you all these other aspects that aren't necessarily relevant to getting its investment properties or its savings properties. Uh, it's relevant for pragmatic use of it, but that's not the point of my book. My point is to say, like, here's why Bitcoin can't be stopped, and here's why it's going to be the most valuable asset in the world. And that means you have to understand the incentives of the network. So when it comes to how the network operates and how it's secure and how the incentives of it are aligned, that's where I wanted to go a lot more in depth. And that was one of the areas that my book got a lot of success for, was explaining, like, here's how cryptography actually works. Here's how your Bitcoin can't get hacked through the cryptography. It can get hacked on your computer, just like anything else on your computer could get hacked. But and here's how, like, the actual mining process works, and it got a bunch of attention for my explanation around that. And there's a variety of other different things I went into, and then I tie it all together with, like, here's all the major criticisms of Bitcoin, and here's my response to everything like that in the final chapter. And that kind of got me started in the industry. And then I spent a little bit of time thinking about building a business, and what it eventually led me to was starting a venture capital fund, which is similar to what the world I came from, but rather than dealing with mature declining companies, now we're dealing with very early growing companies. And for a while, I thought it was a bit premature to invest in companies around Bitcoin. And it was around 2023 when I was like, no, I think we're starting to get to an inflection point. And that's when I got to work on all this. And we started the fund last year, and we invest in startups that, the way we think about it is, we're investing in Bitcoin adoption. We think that Bitcoin price is going to grow. We also think its adoption and other characteristics is going to grow. So we try to invest in infrastructure and things like that around it that are going to grow it. And we think that's going to be a very profitable business of the next decade. And I also think it's solving the most important problem in Bitcoin. Like right now, I think the case for, Bitcoin isn't going to zero. Bitcoin becoming digital gold, I view as near certainty. And the question is what's going to make it the first neutral monetary system of the world? And that's what I'm most intrigued about in this industry. And I think the infrastructure and architecture around it is what's going to bring it there. And there's a lot that needs to be built, whether that's natively around Bitcoin, whether that's integrating it into current systems that are going to increase its adoption to get it to a scale to where its volatility is low enough to make it a better and better savings asset over time for the broader population. And eventually just to be a permissionless neutral system that every type of user is opting into. So it's cool, man. I think we're working on the coolest problem in the world, and now we're here, and it's a busy time, and the stars are aligned with everything. And I think that happens a lot in Bitcoin because it's a valuable asset, and one way or another, people are going to want to support this type of an asset.
Amazing. Yeah, like that's an amazing storyline of like how you came from traditional finance to the Bitcoin and kind of went all in there. The book, just for people that want to maybe read it or something like that, it's called The Seventh Property of Bitcoin. Is that the book you're referring to?
Yeah.
Really cool. How did the name come to be? I disclaimer, I did not read it, but how did the name The Seventh Property of Bitcoin come to be, and like why that?
Yeah, so it's funny because you're like writing it, and the whole time out of the back of my head, I'm like, oh, I got to think of a name for this, and I'm writing this whole list and nothing, a bunch of names. So I'm like, it's all right. And I was like running it by my girlfriend at the time. She's kind of like trying to be nice, and she's like, yeah, it's not a very good name. But the first thing that clicked, I don't think I've ever said this on a podcast before, but the first thing that clicked was when, so I was going back into one of my chapters, and like the fundamental thesis, or like probably maybe not even the fundamental thesis, but like the most novel idea out of my book is there's kind of 6 generally accepted fundamental properties that make money good money. And there's like degrees of semantics of where you can make that a lower number or higher number and things like that. But like generally speaking, it's always been about 6. And the argument that I make in the first half of my book is that Bitcoin it was able throughout history to take all these benefits that we got when we centralized infrastructure around money. And it was actually able to improve upon that and still do it in a decentralized architecture. And like that was the primary innovation, is we could keep everything decentralized without having to have these intermediaries who, like the three ways that intermediaries really interact with money is through its production, its storage, and its verification. And we found a way to do all of that in a decentralized manner. So that gives it this proper property of being an immutable asset. And that's novel. And that's novel within money. And the way that I pose this question is, we've always fundamentally assessed money from 6 monetary properties. Now that Bitcoin has kind of created this new property, we should have 7th property considered within this equation of immutability. And I was like, oh, the 7th property, like that's kind of interesting. And 7's my lucky number. And that was the big thing where I'm just like, yeah, okay, that makes perfect sense. It's my lucky number. Let's make that the title.
I love that. Yeah, really cool. Thank you for sharing the story. It's super interesting that you're doing it with Bitcoin businesses now. One really hard question, maybe, I don't know if you can answer that, but I'm thinking about that a lot because I have so many Bitcoin businesses on my show. You are almost the 400th guest. Like I've my 390th guest here now. So I'm talking with a lot of Bitcoin businesses and people that are doing something in the space. I'm always trying to figure out, okay, how does the Bitcoin business and the ecosystem will look like in 10, 20 years, and what are kind of the most successful ones, the most profitable ones. If you compare it like to what we had for the internet, it was kind of hard to predict at the starting of like the TCP/IP protocol what will be the most successful one with like Apple, Facebook, and Google on top of that. What is kind of those things for Bitcoin, and is that even comparable to what the TCP/IP protocol did for the internet? And then we have those companies on top of each other with Bitcoin, as Bitcoin is kind of different kind of a thing.
Yeah, that's a good way of posing it. So I think there's two things going on here. There is, to your point, analogously with the emergence of the internet, there's new protocols that are emerging. Bitcoin's the base protocol, pretty similar to TCP/IP, and then we have these other internet-based protocols that were built on top that also enabled us to create a more seamless experience, to transfer data, to create security. And it wasn't really until these protocols were all established in a formidable way that the modern version of the internet started to proliferate on top of all of it. Bitcoin is similar in that Bitcoin's this base protocol, and we have these other protocols that are emerging, and they're leveraging Bitcoin in some sort of way. Lightning Network is a very common example. It's just a separate protocol. It could be used for any asset. You could integrate it with, a meme coin if you wanted to. People are using it for Bitcoin because it makes sense to have a protocol like that working with Bitcoin. There's other things like eCash. There's side chains. There's now like ZK rollups, which was something that kind of emerged in the Ethereum world that are coming on top of Bitcoin. All these different protocols are saying we can facilitate this specific function that people are going to need. There's a ton of debate about what the value is ultimately with those over the long term. And it's definitely something I've written a good amount about in more of a technical subject. But we have this emergence of a protocol stack that's happening in the same way the internet did. And then we have businesses, and businesses, some exist today. They don't need to leverage a bunch of that protocol stack. A lot can just exist by integrating with Bitcoin L1. And that emergence is more comparable to when the .com era was emerging, and we had this huge, Cambrian explosion of all these different companies who all had these theses of let's just build something now and let's see what kind of works. And there was a ton of froth and a bunch of things failed. So like with these two dynamics, they're both interdependent on each other, right? Like I think the ultimate 100-year-long type business models that we're going to expect are probably going to come when we have a much better sense of what the long-term protocol stack is that everybody's using, and what types of applications are going to be leveraging that natively over time. So today it's like, what was Apple doing when a lot of that was happening? Like they were building hardware, because all these things were like demanded within the market. Similar today, what are some of the most scaled business models? People who want to get Bitcoin, so exchanges, and then people who are building hardware, ASIC manufacturers, and then people who are operating that hardware, mining companies. These are very large business models that kind of emerged at the right time with the market for what was being demanded within Bitcoin over time. Long-term applications and things like that we'll see. But what's interesting is that because these businesses hit such a large scale from growing with it at the right time, now they're in a better position in the coming years to actually build, whether it's in-house or to acquire other startups, to continue expanding out into other applications that emerge once we have a more solidified protocol stack that people are building on top of. So that's kind of how I'm thinking about a lot of it. But we have established business models. I think that, what we're looking at is a lot around financial services for Bitcoin today. We're definitely investing in a lot of businesses where our view is that Bitcoin adoption is just good. Generally speaking, there's plenty of doomsday scenarios we can walk through of how centralization can impact the network. And that's something we want to be mindful of, but I don't think like ETFs are a major concern for that. I've written a thread on what I think could be something significant, but as it exists today, it's something that's going to be too hard to control because it exists within a market. And all you can really do is create alternative solutions that are competitive against these so that people don't want to buy ETFs. That's the best thing that you can do. But ETFs are an example of something where there could be a significant amount of centralization that comes from it, but it's also drastically increasing the amount of adoption within the asset, which drastically de-risks its value proposition, which drastically increases the amount of adoption of it over time. So it's a question of like, how do we weigh the net benefits? And I think the question's most relevant if there's a way for us to actually control it, which there's not. So it's just like build competing products is the best thing that you can really do. But yeah, there's a lot of interesting financial services applications where all we're focused on is Bitcoin is going to be used as a savings technology for a long time. It's not going to be this neutral monetary system for a long time. That's our long-term vision. That's what we want to create. But we think where the market is today is people just are going to want to store in the most scarce immutable asset that exists. And in the next decade, Bitcoin is going to define portfolios for everybody. And everybody's going to look at this and say, if you had Bitcoin over the past decade, then that's where all the richest people in the world now are those people. And then eventually we're going to hit this medium exchange explosion once that happens. And I think Bitcoin needs to be a, 20 to $50 trillion asset before people really start leveraging it in that type of manner. It's being leveraged at smaller scale around the world in plenty of situations because of its novel properties. But I don't think we're going to see nearly the same scale of adoption happen for medium exchange of Bitcoin until the savings technology is, kind of like matured within the market to a degree. Yeah, I'll stop there.
Yeah, there's a lot a lot already in there. Medium of exchanges. I had this discussion actually today earlier when I met with a Bitcoin colleague for coffee today in Vienna, where people are upset now what El Salvador is doing with kind of backtracking the legal tender law for Bitcoin in El Salvador. But at the same time, I was completely shocked that that there is already a country that is considering that and doing that in 2021. So it's kind of, they were really early to that game. It's like they were like 5-10 years maybe early to doing that in the first place. And now obviously they have leverage and then use that against the IMF a little bit. And I don't know, it didn't seem to be such a bad backstop for the medium of exchange side of things. So that's also what you were kind of saying, where we are still in the store of value phase and the medium of exchange side of things is coming down the line once we really prove them to be bigger than gold or something like that.
Yeah, once it's like reasonable to actually start creating contracts structured, denominated in Bitcoin, because the price volatility is low enough. And you look at all of the charts, and they support that the volatility of the asset's declining. And I don't think that that's any huge surprise. Might be a surprise to like Nassim Taleb, who is pointing to that as his primary argument for denouncing Bitcoin within a matter of like 2 years or something, which was actually just like that was one of the most absurd things in the world. I couldn't believe any of that. But the volatility is declining. Uh, the biggest change that I think is most interesting too is as we watch, and this is what I've been following for years, and it's kind of the only I don't do a ton of like macro stuff on Bitcoin, but the correlation of Bitcoin as an asset class across other asset classes. Like once I think we really start to see store of value is when the massive decoupling of Bitcoin with primarily risk assets within equity markets. Once that starts to happen, it's going to be something that it's going to be stupid for any sort of investor or financial professional not to have an allocation to it. And and the math is starting to support us on that. So now that that's coming into play, I think it could be a matter of years until like Bitcoin is just like across like asset managers around the world. Bitcoin is something that people get the idea of you're more at risk not owning it than you are at owning it.
Interesting. Yeah, I like that. That's for sure. How do you look at the current developments with now the biggest biggest kind of government that's possible with the United States looking at Bitcoin as a strategic Bitcoin reserve? That's for me, that's the same as in 2021 with El Salvador. It seems early, especially you because the US is kind of benefiting from the fiat system the most, where I'm like, okay, they don't have the massive incentive. Maybe they have the incentive because they can lose the most if they don't get on a new system. How do you look at the US dollar might embrace, or USA might embrace Bitcoin?
Yeah, it's a good point because I was of the same framework of thinking. They have the most to lose, potentially the most to gain. It's kind of a game of chicken for them. Um, I've been very surprised at everything that's happened within the U.S. Even prior to the Trump administration, the regulatory developments in favor. I mean, but prior to the Trump administration, like the courts were enacting orders in the U.S. that was supportive of Bitcoin, and and that surprised me. And then the amount of adoption that we witnessed over the past year completely blew my expectations. Um, I have always assumed that it would be a bottom up sovereign level adoption from developing economies that are most removed from trade structures across the world. Like my view prior to everything that's happened last year was that we're going to have some sort of consortium of emerging market economies throughout the global south that are maintaining some sort of reserve in the asset and starting to settle trade amongst one another within the next decade. That's like going to be the first major catalyst towards sovereign adoption of the asset over time. And then here we are. In terms of the criticism about SBR, so I think it's a question of like, how do you think about the strategic Bitcoin reserves benefits and to who? I think from the Bitcoiner's perspective, I view any sort of demand for Bitcoin is good. So it's good in that sense. In terms of actual support by the country for the long-term benefit of the asset, the only thing I care about is capital gains. And what was really cool is what happened in the Czech Republic this morning with Parliament unanimously passing this law that's going to eliminate long-term capital gains tax on Bitcoin. So if you hold your Bitcoin for 3 years, you're not going to pay tax on any capital appreciation on it. And the central bank adopting it as a reserve asset. Like that's massive. That is one of the most important things. And them pushing the domino on that, El Salvador starting, like you're saying, a bit early on that. I like once we start to see this, effectively like arms race for attracting Bitcoin to an economy across different governments. That's when it's like all bets are off. If you eliminate capital gains from all this, that's what enables the entire peer-to-peer system to function without the risk of violence being enacted upon you. Like as long as you know, like once I own this asset, I don't know anybody's shit anymore, and I can just completely operate by using this asset in a peer-to-peer manner. that's a complete game changer for how I think peer-to-peer is going to start to build out. So like that's what I'm thinking is the most important thing. It's like US government can start buying whatever they want. I would actually prefer they don't buy it and they give that money back to taxpayers and then people can go buy it. I like a whole idea of a sovereign wealth fund. I just think is stupid in the first place, especially when we have $36 trillion in debt. So like, there's no point of us having a fund. It's like, let's give this money back to the people we took it from. But I think that all I care about is really more just like what policies are enabling individuals to use Bitcoin to its fullest potential from a regulatory standpoint.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. Yeah, I like that a lot, that point of view of like, we want people of the United States to own Bitcoin, not the United States to own Bitcoin. Like we want to increase the grassroots adoption of it, which is always interesting because like if the United States actually goes ahead and buys, let's say 200,000, 300,000 Bitcoins, this in itself will trigger a lot of adoption, and it will open up a lot of eyes, and it will probably push adoption further down the line. But at the same time, we do want the individual to own most of the Bitcoin, not institutions. But again, like Bitcoin is for enemies, so like we don't get to choose who owns Bitcoin and who doesn't, and it's good either ways for the adoption.
Yeah, and I mean, like, I think people will make arguments like, okay, so if we go a little bit more in depth on the question, the strategic Bitcoin reserve is now going to align incentives of the government's balance sheet with the decision makers within it. And that's going to further long-term benefit the industry. And I think it's true. I think it's a lot more complicated than that. I don't think like politicians are really necessarily incentivized by the fiscal sustainability of our position. I think they're incentivized by, what sort of personal benefits they get from the political position that they're in and what happens after they get out of office. So I don't think it's necessarily going to make them, always be enacting pro-Bitcoin policies. One of the primary criticisms of an SBR of why they don't think it'll happen was that it's a similar argument to like what happened with the Luna cryptocurrency that enabled it to start crashing. Was it, the reflexive nature of it and the circularity that ultimately led it to run up in price so drastically. And then it was all backed by demand for the underlying token, which had no fundamental monetary utility. And then the second the founder decided to replace that token, a proportion of that backing token, with Bitcoin to say we're really going to shore it up, that signaled to the market, well, then this collateral isn't as valuable as Bitcoin. What makes it valuable? And then that's when the entire run on that cryptocurrency happened. And people are making a similar argument to what would happen with the US over time. Okay, if we think that we need to have Bitcoin backing this unbacked fiat currency, then that's going to signal the market. First, an SBR is not backing it. It's just saying we have wealth on our balance sheet fiscally. I don't agree with that argument, just because everybody knows this. Everybody knows that the US dollar doesn't gain its fiscal dominance because of some sort of asset that's backing it. The asset that's backing it is guns, it's trade agreements, it's contract denomination globally. I mean, fundamentally, I think the number one thing that could change, that would cause a death spiral in the US dollar, is if we lost our dominance of control over trade routes globally. It's like a very geopolitical type argument for whether or not the dollar remains dominant. Like, assume tomorrow our fleet just disappears, our Navy fleet. Now these countries that are using it to denominate trade are like, okay, well, you guys guaranteed that you would protect our trade routes with your most powerful military in the world. So we've been denominating our trade in it, and that's why all our contracts are in this. But now you're not doing that for us anymore. Why the hell are we trading in this thing? And like, that is, I think, what fundamentally is backing the dollar. So if we were to like add Bitcoin to the balance sheet and say that it signals something negative about the dollar, it's just like, I don't think anybody cares about that. What matters is that we have the biggest guns and that we don't put our currency into some sort of inflationary death spiral. Yeah.
It's then also the start of, like, if something like that happens, where like big countries, big alliances in the world outside of the US are saying like, oh, we don't trust the US anymore, which already is kind of happening. Is that then the start of this game fear of like people, like countries are trying to figure out what they can trust, and then they're like, oh, there's only one thing in the world that you can trust because you don't have to trust it, and it's Bitcoin. So that's kind of like the way of countries figuring out this whole Bitcoin thing, where they like, we have to denominate trade in Bitcoin. But that's probably the end stage of the Bitcoin adoption, not coming soon, because now it's like too early for that, I guess.
So I wrote a long form paper on this a few years ago when this was when the Biden administration issued sanctions on the SWIFT network to Russia. And then that was bringing about all these geopolitical questions from financial analysts around the world. And then everybody was talking about the implications for Bitcoin and similar arguments of, well, all these other countries have this, are between a hard place and a rock, between accepting dollar hegemony across the world, or using some sort of other alternative system. There's been doomsday sayers saying that the Chinese yuan is going to take over global dominance for decades now. And the question's like, well, why isn't any of this stuff happening? It's like, well, what is happening? We're seeing a gradual decline in dollar dominance across certain measurements. Particularly when it comes to certain trade volumes and contract denomination, capital market denomination. We're seeing a gradual decline, and it has been pretty significant in the recent decade across certain metrics. I think it was what we had a decline in US dollar denominated debt ownership from I want to say it was closer to like 69% back in like 2011. And now that number is closer to like 58%. And like that's material. It's a big shift. And if you look at, well, what is that shift going into? The argument that it's a Chinese yuan is, Chinese yuan picked up a few percent of that total, about a 10% change. And the rest of it's kind of just like a bunch of more emerging market type economies that are operating more independently. So then that's your argument for, well, we're shifting into this more fragmented world of currency, and that dominance is just going to decline for most people. We're not going to have any sort of like, true dominant currency of the world at some point. Um, so then that's like, okay, well, if people are thinking like that, and then the other big shift that we're starting to see as well is from fiat denominated debt as a reserve asset to more commodity based assets as a reserve. And so those two variables, smaller economies are picking up slack, dominance is declining in general, and commodity based assets are starting to get more share within sovereign wealth than fiat denominated debt. So then that starts to make a really strong case for Bitcoin. and and I think that when you think about the question fundamentally, it's just like, okay, well, emerging market economies who have the least to lose would be much more open to Bitcoin. Um, they don't have any sort of dominant fiat currency from which they extract significant political benefit. So they're just going to be using something that's more neutral. It makes a lot more sense for them to do that. And and then Bitcoin functions like a synthetic commodity effectively. So it has a lot of the properties that sovereign entities are looking for when they're trying to own their wealth, and some more, because its storage costs are so low. It's very simple to own massive amounts of wealth in it, and it's permissionless. You don't have to move it over the Swift network. You don't have to physically deliver it like gold bars and have those verified. It's actually just like kind of like an ideal, optimal way of storing wealth. Who'd have thought? And then when you think about all those variables, it's like, okay, so there's this really strong case for Bitcoin. I think it's really easy to get excited. I think, though, what is overlooked are the two primary variables, and the reason when you would own this like kind of crappy US denominated debt that's not giving you a great return at all, and is something where the fiscal situation that's backing it is getting increasingly worse over time. One of the primary variables, if not the primary variable, if you're like a sovereign institution where you want to have exposure of your assets, is that you need to have very large, deep, liquid capital markets that asset can be participating in. If I'm Saudi Arabia and I want to go liquidate $200 billion of an asset tomorrow, then what markets can I do that in without significantly crashing the market? And it's like US treasuries is your biggest, right? And then of commodities, gold is the biggest. So that's what makes gold incredibly valuable to this day, is it has a very liquid market. That doesn't mean that transaction costs of physical delivery aren't high. It just means that there's a lot of liquidity, so that if you were to go sell $1 billion worth of gold, you're not going to move that market too much. Bitcoin doesn't have that yet. We're a $2 trillion asset. We're playing with the big boys, but we aren't near the top of the pecking order in that world yet. And once we get towards the top of the pecking order, that's when Bitcoin takes over sovereign wealth assets. But it's going to take a long time for us to ultimately get there, because we have all the other fundamental properties. And I think the world is shifting in a lot of trends towards, we want a neutral system. We want to have commodity-like assets backing this. I just need something that's going to be incredibly deeply liquid, so I can have a high exposure of my wealth in it and know that I can liquidate that quickly. And ideally, it eventually just becomes money. You don't have to liquidate it in the first place. But it's going to be a long time to get to all of that. And I think like that's kind of the case for how all these shifts in monetary dominance happening at a global level, and how Bitcoin can get involved in that.
Do you see then the move towards Bitcoin only, like the theory of we only have one monetary network, the singularity of the whole world is kind of across like just Bitcoin at some point? Obviously, that is quite a years away, but is that happening at some point? There's like in Bitcoin this old age debate of like, will there always be fiat currencies, or will Bitcoin kind of take over because of game theory, and there won't be anything else that is seriously be called money? I mean, obviously people will use other things maybe as money, as like there's always barter going on. The whole world is really complex, but like there's one dominant monetary network that kind of controls like 95% of the whole monetary value.
Yep. Yeah. So I think that's first like the good caveat of saying like because like in principle, I don't believe like there's ever some form of like true 100%, 99% dominance. Like there's going to be, edge case scenarios, blah, blah, blah. So will Bitcoin become some sort of global direct form of money versus being an asset that backs some sort of sovereign currency? Maybe in a very, very significant way. Maybe everybody's on a Bitcoin standard, and that goes back to, pre World War One or during World War One or post World War One era, and we're around like 30 to 40%, 50% type gold standard backings. Maybe it's like we have a world like that. Is that kind of the question you're getting at?
Yeah, that's kind of the question I'm getting. If it's the one, or is it the backing one? Yeah.
Yeah. So I've written a lot about this. I wrote a paper called Banks Without Bankers. And before that, I wrote a paper comparing a Bitcoin standard type full reserve system, which is what we're describing is like the, basically global neutral type system. And then comparing that to if we're going to have some sort of like fractional reserve type system, which is more Bitcoins as the backing commodity asset. I wrote a very in-depth theoretical economic paper on that a few years ago, trying to just make the arguments for at more of like a theoretical level what that looks like. And then I wrote this paper, Bank Without Bankers, to say like, here's what the technology stack on Bitcoin could look like if it starts to build out a financial system around it. So I think the question is like, will, and it starts with understanding like, how did paper money emerge in the first place? And it emerged privately. It emerged naturally in banking markets because once we had the printing press and invented double entry bookkeeping, accounting, and then eventually had the telegraph, we were able to move money so much more efficiently than settling gold coins amongst one another. And paper added all these monetary properties to money. It made it much more portable. It made it much more divisible. It made it potentially more fungible. It lowered the cost of verification, and that was all very good. And that's why the market naturally converged upon paper. The problem is that paper wasn't scarce, so it needed to be backed by something that was, and that was kind of the inception of like backing a paper currency. When people are talking about what backs money today, the inception was we have a great money called paper for all these different reasons because it fits with the technology of our time very well, but it isn't scarce and it needs to be backed by something that is. And gold type standards emerged privately. In the West, the inception of this, at least with what the U.S. kind of built its banking system around, was in England under the goldsmith bankers when they emerged privately. And there's a ton of cool history around all of that. But why did governments get involved? Governments get involved for the reason they always do. They want to help people from the problems in the private markets, and then they end up doing the exact same things themselves. So there were problems that were existing within the system, like any private market system, and the government said we're going to fix these problems, and they came in and took control, and then did the exact same moral hazard that existed in the private system themselves. What did? They expanded the money supply too much. They used it to try to create fiat systems so that they could have their cake and eat it too. And that's created boom and bust cycles of central banks throughout Europe, throughout the US, through the past few centuries. We did have other private banking systems that had emerged, and the government didn't get as involved. The Scottish free banking system, the term for that's free banking. In Canada, there was a reasonably successful system for a period of time. This was all kind of like 18th, 19th century. And then in the US, we use like the pre first central bank era of wildcat banking is a good example. That's not a great example because the government was so involved in it that it screwed up a lot of the free market incentives that would make a system like that function. But nonetheless, paper money emerged naturally in a private market. So the idea that we're not going to have a similar like digital and a similar system emerged digitally on top of Bitcoin, the burden of proof is on us to say why we're not going to follow the pattern of history with that happening. And then the question becomes, well, what technologies of the time would change that? What is going to make us not have receipts on Bitcoin? Something like the Lightning Network is a great example of how we can have a guarantee on a fully backed Bitcoin through transactions using novel technologies. And there's other technologies that are attempting to provide similar guarantees right now. This ties back to the beginning of what's the protocol stack on Bitcoin going to be. These types of technologies that give assurances that could be used by financial institutions like banks that we've never had before exist, and there's more coming. The problem with all of these things is it doesn't really matter if we can create things that give us these types of guarantees. All that matters is, what does the market want? And will the market ultimately demand these types of things? If it was simple enough for me to run a Lightning node is to download an application on my phone, it would probably be really easy for everybody to have something like, peer-to-peer direct payments that are hyper efficient, and you can, guaranteed to be backed by Bitcoin on the base layer. But it's not that simple. There's economic costs, and it's actually a lot more complex. So we're starting to see institutions that manage Lightning nodes on behalf of people. And there's some trust involved in that process. And it's kind of like we have a protocol stack emerging, but it's providing similar functions to what a banking institution would do for Bitcoin. And the nature of banks is probably going to change very significantly, but I don't think we've completely disintermediated the financial system. So then that means if we haven't completely disintermediated it, then we have a similar phenomenon emerging on top of Bitcoin, where private market banks or, financial intermediaries are starting to emerge. And to what degree will the government be able to get involved in all that? And it remains to be seen. And I think I make an argument in this paper, Banks Without Bankers, that I think what's different this time is we're going to have a system that's so efficient with so much information transparency that can use software and cryptography in novel ways, to where it's really just going to be impossible for regulators to ultimately insert themselves too much in it. That's the utopian vision, but I think it's a reality. I think it's something that could definitely happen if we can build things that are competitive in a market at a cost level to where consumers want to use something like that. But nonetheless, I think that even with even significant degrees of financial intermediaries that are used to enable us to all operate on a Bitcoin standard, as long as the market is competitive at a very high level, that will solve a lot of these trust issues that people will have with intermediaries being involved in the money. Hyper-competitive markets are one of the greatest things in the world for people. They build things that we just never would have thought possible and serve consumers incredibly well. So the questions, to me, what I'm most concerned about is how competitive and fragmented can this market ultimately become over time? And the key variable that I look at to say, if we're looking at new technologies emerging within the Bitcoin protocol stack or with companies or applications or things like that, is any sort of new protocol that emerges, what's the marginal cost for somebody to participate in that protocol? Like, that's the fundamental thing. That's what made Bitcoin decentralized. And that's what's going to keep Bitcoin decentralized, is that the cost to participate in the Bitcoin network, if you were to compare this to any other cryptocurrency, is drastically lower. If you want to set up a full node, the amount of gigabytes in hardware, whatever it's out, like 400 something right now, to download the full blockchain, and the cost associated with the hardware to actually do that is drastically lower than any other comparison. Like the next biggest competitor in terms of market cap of Ethereum, where it's, over $10,000, I think, to actually be like a validator within this network. And then you have to have a significant amount of Ethereum to stake within it, et cetera. It's too complex for anybody to actually set up themselves. You can participate in a full node in the Bitcoin network from your home computer. So like that marginal cost of participation for people keeps things very competitive. And from the protocols that are emerging on Bitcoin, I view that if the marginal cost is low enough, that these could also be very competitive markets. So then the question is like, well, what is a competitive market? And if we were to compare the historical nature of private banking systems that actually, like free banks, that actually functioned reasonably well for consumers, this system that's emerging is going to be drastically more competitive because it's going to be a lot lower for the barriers to entry because the costs are going to be a lot lower to participate. It's going to be much more permissionless to participate. It's going to be a lot harder for governments to control that access because you can access it through the internet. You don't need to go like build a shop and like get contracts to set your bank up. And there's all these things to where it's just going to be so much harder to control it. It's going to be so much easier for people to get involved. And it's going to be so much more automated through software. And there's going to be so much more information transparency that'll exist. And all of those variables or functions that make this market, I think we're going to have a market that's so much more competitive than we've ever seen. So to tie it back to the original question, like with all that context, will we be able to see something where it's a commodity backing a government currency, or will it be a globally neutral type system? So like, let's assume that what I just described is true. We have this hyper competitive market of service providers around it. Why would we care about having a government currency involved in any of that? What value do they really add to it? And how governments would get involved before is if there's significant degrees of fraud, there's significant amounts of money that's being lost within the system, and they can coalesce voters around choosing to get them more involved. And then that is the beginning of the process towards an eventual fiat system. So if we have this emerging native system and it's functioning well for consumers because it's drastically more competitive than anything we've ever seen, and people can always, and this is the primary variable that's never existed, you can actually participate in a peer-to-peer economy yourself if you want to do the work. You don't have to use intermediaries if you don't want to. And because that possibility exists in this system, that means that all of these other financial intermediaries don't just have to compete with each other, they have to compete with that substitute economy as well. And we've never had banking systems where it's been like, all right, like pull your money out of the bank, and unless you're like a drug cartel, it's very challenging to just go operate everything in a cash economy in the market today. It's just not even like a possibility for you to function with your life like that. And that will be a possibility within the system. So that's this whole new competitive dynamic. And if a government's trying to insert themselves within that process, I think they're going to have a much harder time getting voters to actually agree with them on that, because there's not going to be a big enough problem for them to solve. And I think if that's the case, having governments being a part of that currency is going to be something that just doesn't make sense within the market. And I think like that's the case for how a global neutral system emerges. I think in the near term, though, I think we're going to see plenty of governments backing their currency with Bitcoin. And like, that's great. I think it's demand, it's emerging everywhere. And I think that that'll become very significant. But I think over the long term, there's a very strong case to be made that we'll end up in a Bitcoin denominated global neutral system that emerged from private markets.
That was amazing. I loved how how you put it, and kind of way of thinking about the competitiveness of the market, and especially of like what value governments can add. And they can add a lot of value with gold, and they cannot add a lot of value when the asset and the network is completely open, permissionless, and transparent, to the point where you can have not as much fraud in it than you would actually have maybe in other markets. That's a really interesting point. I want to talk because we already had like 1 hour before we kind of close it. I want to talk to get there. People talk a lot about different growth rates. There are a lot of different price models, and price models for me is like a translation of like, how do you see the growth happening for Bitcoin? Price is then just a consequence of that. You said before that you expect volatility to continue to go down, and there are two different I have two different kind of guests on. The one says like, yeah, we kind of follow a diminishing returns kind of a strategy, like power law, or like the Seyr model, or like that, many different models around that. Yeah. And the other one is like, no, like we will hit that S curve adoption, and the peak of volatility at the peak of like the steep curve of the growth rate of the growth curve is kind of still in front of us. We are in the early phases of that. How do you see, if Bitcoin is successful, if we get there to the point that you just described, how do you see the growth of that technology? Is it more of like an S curve adoption, where maybe volatility in the medium term actually goes up because we hit a steep adoption curve, or is it that slow in quotes, because Bitcoin is quite fast anyways, but slower organic growth where we slowly grow, but the growth rate is actually slowing down a little bit?
Yeah. So is like our founding investment philosophy document for my company. We wrote this paper that I called Bitcoin Marginalism, to kind of define how we think about it in contrast to like, the Bitcoin maximalist viewpoint. And the way that we're viewing adoption cycles is there's going to be 3 S curves: store of value, medium of exchange, unit of account. I don't think we've hit the inflection point in store of value. I think we're getting really close right now. And it's going to be the longest tail. And then I think it's going to happen much more rapidly after that. And these are going to be a little bit more quick, and they're going to be a little bit shorter to the diminishing returns point. Volatility is going to be spiking for significant periods over time. Like when I'm talking about volatility declining, it's like, we've got over 15 years of data to work with at this point, and we do see a line of best fit that's going this direction. So that's good. I think we're going to have spikes in the S curve. Volatility is going to go up massively. The fundamental drivers behind what I think is going to make the line of best fit continue to go down over time is that we are getting a deeper, more liquid capital market around Bitcoin at a global level. Credit markets are maturing. That's one of the biggest things that's going to change this year. In the US, SAB 121 being repealed, banks are going to start adopting Bitcoin. The amount of lending that's going to happen on top of Bitcoin as a collateralized asset is going to expand massively. And it's going to be from actors that are a bit more regulated, a bit more sophisticated. They've been doing this type of business for a long period of time. And that's going to change how sophisticated credit markets are. It's not going to be, I think, to the same degree of BlockFi and Celsius and FTX of, we don't even know if we have the Bitcoin in account, and we're going to rehypothecate all of it, and we're going to build $1 billion business, and oh crap, it disappeared tomorrow. Like, I don't think we're going to be seeing that degree of fraud and risk taking as much anymore. Of course, these things will always still occur, but it's going to make people feel more secure in participating in this economy, and the lending is going to be much less boom or bust. The biggest thing that I think, we're releasing an annual report through my firm. So if you follow me on Twitter, you'll find that. I think one of the biggest things that we see is like, what's going to cause the next boom and bust within Bitcoin, or is this the last one? I think that the biggest thing is Bitcoin corporate finance strategies are going to grow massively over the next year. And there's going to be a ton of risk takers that start to emerge within all that. There's going to be a bunch of cowboy CFOs who all want to get a pop in their stock price, and they're going to adopt Bitcoin on their balance sheet, and they're going to go take out a loan to do it. They're going to accept cheaper and cheaper terms. And eventually there's going to be a bunch of guys who are over leveraged to get Bitcoin on their balance sheet. And I think we're probably going to have a bit of a boom and bust in that over the next year.
Interesting. That's one more. You described it with like the business as one more aspect that I'm really curious also about. We see now the early signs of like big institutions adopting Bitcoin. Obviously, the MicroStrategy playbook is the one that are now other companies also adopting. Semler Scientific, I think Semler Scientific was the first real company that stepped into MicroStrategy's playbook. Then MetaPlanet and other companies also followed. Fun enough, the last guest, so like the previous guest to you, was actually Eric Semler from Semler Scientific.
Cool.
Right before that, how do you see long term businesses impacted by Bitcoin if they have now a savings vehicle where they don't have to do it with like if you invest in something, you have to care for that. Like you have to look into the investment thesis of that. And so they have a cash balance. And if that cash balance is eroding, you have to do something with that. What changes in a business once that cash balance is no longer eroding away and the cash balance is kind of Bitcoin? What MicroStrategy did, with Summer Scientific did, what MetaPlanet did. So what do you think will be the long-term impact on businesses and on their investment decisions of them long-term if they have a cash balance which is actually appreciating versus depreciating on the balance sheet?
It changes time preference. Once businesses go through a cycle of realizing that the best return that we've given to our equity holders was from the Bitcoin sitting on our balance sheet, all these other activities that we've been conducting on the side have not provided that much value. That marketing guy we just hired, we should have just put his salary into Bitcoin. That back office admin that, gave us a little bit extra time, should have put that into Bitcoin. Our CEO, he didn't really make a lot of great decisions this year. We should just put his salary into Bitcoin. And everybody's going to be thinking from that type of perspective over time. And it's going to be great for capital allocation. I think a lot of businesses are going to end up looking in the mirror and they're just going to be like, what are we doing that's actually valuable here? And it's going to make them think much more long-term. And that's going to provide better, cheaper goods and services to the economy and improve people's lives.
I love that. It's basically the same thing that happens on an individual level. Once you get on a Bitcoin standard, you rethink things. Really cool. We have one question that I asked each and every one of my guests. And the question is, what can we learn from you besides Bitcoin?
Like I said, there's a lot of like financial topics and things that I'm pretty interested in. Bitcoin's dominated my life at this point. In terms of other things, a lot of like entrepreneurship type stuff. I think I've learned a lot over the past 5 years since I've been on all this journey. And it was long, it's been arduous. And I think that despite things going better than I ever could have expected, there's a lot of like personal things that that I think are really cool that you learn by taking on a significant amount of risk and following your intuition. And I think that changes your life pretty significantly. And it's led me to do all these other cool projects as well. Like our office for my company, it's in a local nonprofit that I helped start out here in Denver, and we're like a Bitcoin citadel effectively. And we just organized a group of guys. Nobody owns this thing. We all got together, convinced other bunch of people to start supporting it, and now we have this like really nice big building that we're having all of these like industry leading events at, and that's been super cool and rewarding. And I don't make money from it, but learning how to just one of my favorite things is just starting things from nothing. And I think that's one thing I could communicate is go do that. It's so much cooler than living somebody else's vision.
I totally agree with that. I did the same exact thing, not the same exact thing, but doing exactly that last year, and it paid off really, really cool. We have an end routine in the podcast where the previous guest, in that case, Eric Semler, asked a question for the next guest without knowing who the next guest actually is. And your question from the previous guest is, what impact will quantum computing have on Bitcoin?
Yeah. I raise money from financial investors, and this topic comes from them all the time. All right, here's my take. So this concern's existed for a while. It's not something that nobody's aware of that came out of nowhere. I think a lot of people have that perception that it is. A member of the space, which is this nonprofit out here in Denver, he goes by the pseudonym Hunter Beast. and he is like kind of one of the leading authorities on quantum resistance cryptographic signatures within Bitcoin. He wrote, I think it's, I don't want to butcher it, 360 or like 362 is his BIP. But if you search Hunter and his in quantum resistance BIP, I think it'll pop up. But he, so him and I have had a lot of conversations around all of this, and like basically the lay of the land is that quantum attacks, like the whatever it was, like Chamath had this whole like fear mongering thing around quantum within Bitcoin this year. You're not attacking Bitcoin, you're attacking cryptography. Cryptography is what secures a lot of different, is a technology that's used to secure a lot of different things within Bitcoin. In fact, it's used to secure a lot of different things everywhere on the internet. And if we were to have quantum cryptography broken, if we were to have cryptography broken by quantum computers, then that would undermine much of the systems that we use within technology today. The funniest thing is how this criticism is used in the media is some sort of like knock against Bitcoin. It's like, why don't you ask about everybody's bank account? Because that's where all the money is right now. And that's what they really should be concerned about if cryptography gets broken. But nonetheless, we're going to have a lot of big problems if this scenario were to happen, and Bitcoin is probably not going to be the focal point of that if it were to happen within the next year. That said, it's one of those problems where people have been saying that it's coming soon for a long time. And it's one of those things where maybe it happens within the next 5 years. It could very easily happen within the next 10 to 15 years. But we have plenty of time. And then the question is, well, what happens to Bitcoin? There exists different types of cryptographic signatures, which Bitcoin is a soft fork away from including, that are resistant to quantum cryptography. The question is there's older ones that have a much stronger Lindy effect. They've been around for a while. They're more proven. We can get very comfortable with implementing them into a soft fork. Those, to the point I was making earlier about nodes having a low cost, marginal cost participation by buying them, not as much, doesn't require a ton of memory to set one up, about 500 gigabytes. If we started using quantum resistant signatures, then that could drastically expand the rate at which the bloat within the blockchain growth over time starts to happen. And that's really the argument against why we would want to use one of these. Now, there's other newer quantum signature schemes that haven't been around as long and haven't been proven out yet that are much more data efficient to where that problem would be much less of a concern. I think that within the time horizon at which quantum resistance is a risk, we're probably going to get a lot more comfortable with using some of these more efficient quantum resistant signature schemes. And because of that, it's not really a massive concern to me.
Interesting, yeah. By the way, I just quickly checked it out. It's BIP 360 from Hunter Beast. He's also on Twitter. I saw it. It's his pinned tweet. If you search on Twitter Hunter Beast, you find it, and his pinned tweet is directly on there. Thank you so much. That was really cool. Before I let you go, where can people find you, ask you questions, especially find all those great articles that you mentioned, your Twitter and everything like that?
Yeah, it's fun. I actually don't even think I have my website link on my Twitter anymore. So some of the articles are on my blog. It still exists. It's yakes.io, my last name.io. Some older papers I wrote. If you go to my firm's website, there's going to be some new releases around an annual report on the Bitcoin ecosystem coming out. And then that Bitcoin marginalism paper with the S-curve adoption cycles that I was talking about earlier, that's there. And that's epochvc.io. So epoch, spelled like that, EPOCH, vc.io.
So basically on your Twitter side, there's yakes.io linked, and then there's... Yeah, exactly. There's both linked. So like link is as always in the description, so you can check it out if you're interested in that, and then from there you can basically get into everything else. Thank you so much, Eric, for being on the show. It was a pleasure having you. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye bye.